Okay, am I live or not? This thing's telling me going live in, and then, okay, it says now I am live and recording. Let me do my ceremonial drink of my water. Okay, chat spammers, you will be kicked. Okay, just note that. Chat spammers will be kicked, first of all. Now, I'm not going to be able to monitor it all the time. So there will be some chat spamming. Those of you who find that annoying, which is most of you, you remember that you can view this at full screen if you're just wanting to pay attention to what I'm saying, which would be a good idea. Then what you want to do is view this at full screen and you won't be looking at the chat. But if I catch people chat spamming, I will kick you, okay? And also, we just have to remember why we're here. I mean, there are all kinds of places. Like I'll do over the next few weeks, I'll do some things on my YouTube channel. We expect some chat spamming here and there, okay? We expect some chat spamming, but here, let's not do that. All right, so as far as that, okay, go ahead and note the quality of the broadcast right now. Let me just go ahead and note. Let's see. So quality of broadcast. Okay, so great. Audio or video issues. Okay, so let's just throw this out there real quick. Let me just note here. And we're going to be focusing on the Great Depression. Now, let me say that this is distinct from the New Deal, okay? This is distinct from the New Deal. Lowest quality possible, unclear. All right, so it looks like, okay, so it looks like about 40% of you are getting something good. Let me see here. Let me see what's going on. Fixed it. All right, so what you need to do, close tabs, take it off the home page. All right, so y'all let me know if you had something. So let's see. So if you've got other stuff up, you know, I'm going through and I'm going to close, I'm going to go ahead and close some tabs and that sort of thing. So let's go ahead and do that. So I'm going to go here and close some tabs. Now, y'all are in APUS history. What I want to note here is that one thing that I would like for y'all to do, I'm also going to be broadcasting. Now, the Corona class is content driven and exam driven. Go ahead. I just posted a link here to Marco Learning's session that I'm going to be doing at 6 p.m. this evening. Okay, so at 6 p.m. this evening, I'm going to be helping with a session. I'm going to be with John Muscatello from Marco Learning, is how to study APUSH online. Okay, so it's going to be how to study APUSH online. So go ahead and just go click that link that I just shared here. Okay, so that way you can go ahead and do that. Okay, so I'm closing tabs as well. Let's see what that does in terms of the quality. I tell you what, I love tabs. I have so many tabs open right now. And so with that, Tom Richey said, yeah, I'm actually, while people are out of school, I'm broadcasting like crazy. Okay, this is my second session today. I did a tutoring session this morning. Now, also, y'all keep in mind, for those of you, we're in big sessions, I will be plugging some of my online tutoring services at some point. But at the same time, we're going to be focusing on content here, and make sure that you are in that you're registering for that Marco Learning webinar. Okay, so make sure you're signing up for that Marco Learning webinar, because that is something that I think is going to be very helpful to you. Okay, so let me just go ahead. Hopefully it's sounding better now. Okay, are we getting something better now that I'm closing tabs? Is that making a difference? Okay, I just want to make sure everybody's got the best thing. Okay, so great, let's go. So let's go ahead and remember what we're going to note here. Let's see, as far as the question, can I join the APUSH Discord server? Contact me about that outside of this session somewhere, okay? So we'll think about that. I'm not against it. I just need to learn a little bit more about it, okay? So as far as that goes, we're going to get into, let me make sure here that I've got a question. tips about the DBQ section of the APUSH exam, I'm going to refer you to my video. If you go to YouTube and search for APUSH DBQ, you're going to see my videos, okay? So that's something that you want to take a look at. I've got a lot of tips. They're in that video. Now, New Deal is going to be Friday. So if these are questions about the New Deal, let's go ahead and do those on Friday. What we're focusing on here, we're going to focus on the causes of the Great Depression, the 1920s, and we're going to focus on Hoover's depression. Okay, that's what we're going to want to look at here. Now, I can take some questions from earlier, like there were some other questions that might have not gotten answered about the 1920s that I'll be glad to address. But remember, the New Deal is going to be on Friday. So priority is going to go to questions about the causes of the Great Depression and, Hoover's depression. So here's the thing, all right? So Claire, you are asking here, what was a greater cause of the Great Depression, failure in the agricultural sector or the manufacturing sector, okay? So let's go into this, okay? Because I can't answer that for you. Okay, I'm not able to answer this question for you in terms of what was a greater cause. You have to act as a historian and answer that for yourself. So, for example, if we think about this here, like in terms of if we compared this to the American Civil War, for example, and somebody were to ask me, Richey, can you tell me what was a greater cause of the Civil War, slavery, states' rights, or economic sectional differences between the North and the South? And I would respond to you. I would say, well, here are some arguments for this. Here are some arguments for this. Here are some arguments for this. All of these explanations have value. But at the same time, you have to make the judgment about what would be the biggest contributor, okay, using the evidence that you've got there. So when we think about the causes of the Great Depression, okay, the Great Depression. So let me go ahead and I'm going to get also let's go into this. Let me see like a good place to start here. Okay, so let's look at some of the biggest explanations. Let's pull up the APUSH CED 2019. See what they're wanting us to focus on, and also I'm going to create a Google document where I'm going to jot down some notes from this session. Okay, so let me go ahead and get into here, and we will go into, let's see. This is going to be US-02, the Great Depression, 1929 to 1933. Okay, so we're going to do that, and I'm going to go ahead and share this with y'all. I'm the only one who has editing privileges, and I'll share this thing so that y'all can look at it, because some of y'all, it may be too big of a session. A lot of y'all aren't going to be able to click that direct link, but save the link and it'll be around later. Okay, so that's something that you'll want to get into. Okay, so let's go ahead and kind of get into when we're thinking about the causes, and I'm going to go through these right along with you. This is really just kind of us sitting around and having, for lack of a better word, something of a fireside chat, right? So I don't necessarily have something like super formal to throw in front of you, okay? And so what we're gonna look at first of all is that when we look at the 1920s, okay, 1920s were a great time for American business and manufacturing, okay, but not the best time for labor and agriculture. So, those sectors were suffering during this time, okay? That basically we see that if we think about the 1920s in context, okay, and the thing is, this is what happens with people, just in general. So when we think about the 1920s in context, okay, so when we think about, for example, the Gilded Age, okay, so during the Gilded Age, we see that basically there is government support, okay, support for big business, okay. So basically, when we think about government support for big business, that means that low taxes and regulations, okay? And then when we think about the progressive era, okay? So what happens with the progressive era when we're thinking about causation? That you had this government support for big business during the Gilded Age, and there was a popular outcry for regulation, okay? That the government needs to do more to regulate big business. And so that's something that we want to focus on. Now, the thing is, what we see is that after all of this so after the government support, we're going to see government regulation of big business. Okay, so we're going to see regulation of business, and that's basically what we're thinking of when we're thinking of the progressive era. Is this, is this increased regulatory climate? Okay, so we're thinking the Gilded Age, 65 to 1900, the progressive era being about 1900 to 1920, and then the 1920s, 1920 to 1929. So when we think about the 1920s, then we're looking at kind of a toning it down from the progressive era. Okay, so we're going back, we're seeing another another kind of phase here where we're going to see again so here increased taxes and regulations. Okay, so more taxes and regulations, low taxes and regulations, and that, so basically we see this kind of cycle here. And when we look at this, like on one hand, we see economic growth, like very massive economic growth, but massive economic growth that crashes at the end. Okay, so that's what we're looking here, that the 1920s. Okay, so when we look at the 1920s, were a period of massive economic growth, but they ended with a crash. Okay, and so this is the thing. What we have to do here is then we have to answer why. Okay, and that's where the work of the historian really starts. So it's like we could say that the stock market crashed in 1929, and that's something we can all agree on. That's a fact. But then when we start to ask why, then we're thinking in terms of a historical judgment. And so that's something that is going to be important for you to come up with, because historians have different things that they are going to be focusing on, and a lot of times they have agendas. Now, then again, there are some things that we can all agree on. For example, if we're thinking about, like, did the New Deal programs result in recovery, an immediate recovery from the Great Depression? The answer from historians across the board would be a resounding no. Now, then when we can start talking about things, because we've got data to back that up. And then when we think about, but were the New Deal programs, like in the long term, were the New Deal programs helpful and successful? Okay, so when we see that the New Deal programs, that there are, so as far as that goes, seeing here that when we're looking at the depression, so when you're thinking about the agricultural sector, all right, we think about the agricultural sector, we're going from a rural agricultural economy to an urban industrial economy led by large companies. So when we think about this, first of all, the 1920s, okay, were a period of transition. Okay, and this is one thing that would be a great piece of specific evidence. Okay, that the 1920 census. Okay, so 20 census was the first census that had that showed more Americans living in urban areas than in rural areas. Okay. And this is something that is very important if we think about this, because, you know, in the founding period, okay, so when we think about this, when George Washington was president of the, okay, yeah, I'll share the page. Okay, excellent. All right. So let me go ahead and share the page. Great, great thinking there. So, you know, when we think about this in the 1790 census, okay, so by comparison, the 1790 census had 95%, okay? 95% of Americans, and let me make this a little bigger as well, okay? So we'll make that. So 95% of Americans living in rural areas. Okay. So when we think about that, in 130 years, you know, the United States is becoming has become an urban industrial power. In the 1860s, you know, Americans, it was just a bunch of farmers killing each other. Okay. So as far as that that goes, we're seeing that. So, you know, going from there, you know, we see the transition here. Okay. So we're no longer an agricultural economy. So that transition is happening there. And anytime, like one thing we want to note here, that upheavals are perfectly understandable. Okay. That economic upheavals. Okay. So economic upheavals, you know, can be a natural consequence, okay? You know, a natural consequence of change, you know, of change. So when we think about that, we're seeing that part of it is just that change was happening there. So we are transitioning to this urban industrial economy led by large companies, okay? And so when we look at this, what we're going to see here is that, you know, we have all of these household appliances. Now, just going from some encyclopedic sources as well. And again, there's nothing wrong with, you know, looking at there's nothing wrong with looking at these things and kind of seeing like what are some of the explanations that are being given here. Okay. Now, one thing that we want to note, because we were talking about the different, you know, the different things that are going on in terms of the different things that are going on in terms of new technologies that are happening. Okay, so going from there, now see, we can also get into here, which gets into a lot of, like, you know, economic stuff, and that's definitely not something that you need. But you see, Keynesian, monetarist, all that kind of stuff, you don't necessarily have to get into that. Okay, but we also want to note here that, you know, people were buying, you know, you know, basically all of these new appliances. Like one of the explanations is overconsumption. Okay, so we could say that this is kind of a natural consequence here, but then we can also get into, oh, let me go here. Okay, so specific evidence here, and so then we can get into the issue of overconsumption. Okay. Okay, and that is something that we're going to see in terms of, that's what you're getting into. And I'm going to kind of simplify and explain that to you. Now, drastically lower investment and persistent under. Okay, so depends on, now here's the thing. Okay, now under consumption, we're going to see here that you know, we're going to see, okay, under overproduction. Okay, so overproduction. Okay, I'm not going to try to be a, okay, so now we're going to see basically all of the, so overproduction. Okay, in the late 1920s. Okay, so when we look at this, we're getting in a little bit of like deep economic stuff. And so overproduction in the late 1920s. So going from there, what we're thinking about is that there are, you know, basically nobody is thinking about slowing down. Okay, so this is one thing that I've seen before as well. What we need to think about is like cheap. Okay, so, well, oh, oops, yeah, so not 3, but 2. Okay. So basically cheap credit policies. Okay. If we look at the Federal Reserve historic interest rates. Okay. So I'm going to show you something here. We're going to get deep. One of the things about being at home is we can get a little deeper than we might get into a, in a classroom. Okay. So let's go ahead and take a look here. If we look at historical data are now available. Okay, so let's see what we can find as far as interest rates. Okay, let me see what I can find here. Let's see, Federal Reserve in historical interest rates 1920s. All right, so when we look here, the Federal Reserve in the 1920s interest rates. Okay, so the Fed, when we look at here, the Fed funds rate, bit of fuss at the beginning because the dollar had slipped from its gold parity. This was remedied in this period. Okay, so when we look at lending rates from the Federal Reserve, okay, so what's going on here is when we look at lending rates from the Federal Reserve. Now this one's very hard for us to see. Let me see if I'm able to make this let's see, open image in new tab. Let's see. Okay, this is much better. Okay. So we're going to look here, U.S. overnight broker lending rates. Okay, so when we look at this here, what we're seeing is that during the, after the war, we see a lot of kind of panic here. The lending rates for brokers, are going to be for an overnight lending rate, 16%. Now we see this go down as like under 4%. So when you look through the 1920s, you're going to see that basically the Federal Reserve interest rates are around 4%. So very low interest rates. And then what do we see happening all of a sudden in 1928? Bam. Okay. So what we see here are what we would call cheap credit policies. Okay. From the Federal Reserve. Okay. So when we look at this, we see here that between from let's put that up here. All right, so from about 1922 to 1928, the interest rates were kept very low. Okay, so from 1922 to 1928, that they had cheap credit policies. Okay, so what we see here is that the Federal Reserve set interest rates around 4%. Okay, 4%. So set interest rates around 4%. Through most of the 1920s. Now, here's the thing: when interest rates are low, what does that encourage people to do? Okay, so let's go back to our chat here. When interest rates are low, what happens? Okay, let's go into that. Okay, we got some poggers here, but as far as that goes, what have we got here? Pog Tom being close to the camera. Okay, so yes, being close to the camera. All right, Pogs for Tom. So let's go ahead. Yes, we take out loans. Okay, if interest rates are low, people buy things on credit. Do y'all like me a little bit farther back from the camera? Is that what y'all like? Yes. So basically, when we see here that people are going to borrow more money. Okay, so low interest rates, rates encourage borrowing. Okay, so they encourage borrowing, and people took advantage of these to get a hold of new technologies. Okay, so people took advantage of these interest rates in order to buy new household appliances. Okay, so new household appliances, automobiles, and to wire their homes for electricity. Okay, so imagine at this, when you think about like when you bought your, you got your first iPhone or something like that. I mean, there was a time during the 1920s when Americans are, they live in a house that was not built, it was not wired for electricity. It's like today when we build houses, we wire them for electricity. But at that time, oh my goodness. Okay. So, but at that time, we were, people were living in houses that were not wired for electricity. They had to pay for that. And so there are all of these things. Since interest rates were low, you had excessive borrowing. Okay. So excessive borrowing, okay, you know, due to cheap credit policies from the Federal Reserve. So when we see this excessive borrowing, now this is also something that people started speculating, okay? So when we look at stock market speculation, okay? So when we think about stock market speculation, now, I'm thinking about speculating in the stock market because it's so low right now. Okay, when we speculate, okay, when you're speculate, now you might remember, some of you might remember when we look at Alexander Hamilton's report on public credit, that Alexander Hamilton wanted to pay back the debt of the United States at face value. Basically, a lot of these certificates that Continental Army veterans had, they had sold at 25%, 25 cents on the dollar to speculators. And so Jefferson and Madison didn't like that Hamilton wanted to give face value to redeem debt at full value to people who were not even the original holders of the debt. Now, Hamilton ended up winning there, and he was right from purely like bottom line public credit perspective. But speculators are basically people who gamble in the economy. If you're a land speculator, during the Jackson years, there was a lot of land speculation. That's when you're buying land, not to improve the land or to live on it, but you're buying the land so that you can sell it later. You're basically buying it just to sell it later. And so when you speculate in the stock market, you are going into it kind of like, if I speculate, like basically I could speculate right now about what the college board is going to, I could speculate about what the college board is going to announce on Friday. So I'll speculate that I don't think the college board is going to do at home online testing. I just don't see that happening, but they could do it. I could be wrong. And so that's when you speculate about something. So stock market speculation. Okay. So when we look at this, with the stock market, okay, so the stock market performing, at record levels, record levels of growth during the 1920s. Many Americans bought stocks, without really, without necessarily doing their homework. Okay, so doing their homework or intending to hold on to them. So they were buying stocks to make short-term gains. Okay, they were, basically they're buying stocks to sell them a short time later. Now, because of the cheap credit, okay, so because of low interest rates, this is something that happened here is, there were, so when we see here, some people bought stocks on the margin. Okay, so on the margin, and on the margin meaning that they mean with borrowed money. Okay, so basically what would happen here is that I want, if I'm thinking in terms of like right now, I'm looking at Delta Airlines. Okay, like when I go to E-Trade and I'm looking at Delta Airlines, let me show y'all this. Okay, let me just pull that up. Let's see. So Delta stock. Okay, so if we are looking at Delta stock right now, it is down to 21. Okay, it is down to 21. I'm waiting on this E-Trade account to free up the money that I put into it. Not a lot of money, but I wanted to play around. I was like, you know what, this stock market's really low right now. And so I'm like, I want to buy some stock in Delta Airlines. I'm still waiting to have cash available for investment. They've got my money. They haven't freed it up for investment. Watch this. Okay, if we go back 5 days, Delta was at 37.47. If we go back 1 month, okay, let's go back 1 month, Delta was at 58. Now Delta's at 21. Now, what I would do here, if I can speculate. Now, I could be wrong and Delta could end up going bankrupt. But what I'm seeing here is when you look at the historic performance of Delta stock, that before this coronavirus crisis hit, it never went below 56. Okay, so when we see that, or 52, 53, but it never went below $50. Now it's at 21.28. So when I'm thinking about speculating, what I'm thinking about is that how confident am I that once this crisis is over, Delta is going to, is going to bounce back. So 6 months from now, if it goes back to 58 and I bought it at 21, that is a very good investment. Now, let's say that Delta, though, goes bankrupt because of this crisis. And I hope, that's, and everybody's going to be all like, Richey, you shouldn't have invested in the stock market. Certainly there's less confidence in the stock market today than there was a few days ago. Okay, so we see here that Delta stock is shooting down. And so when you speculate, you got to think about what is going to be over here. Okay, is it going to go up, or is Delta going to go bankrupt? But right now we're definitely seeing a stock market panic. And so when you start to see the excessive stock market speculation, now I will tell you what I'm not doing is that, with this E-Trade account that I just started, I'm using my own money. Now, what you can do on E-Trade, you could get on there and, so as far as, here's the thing, that stock, you're basically buying a piece of the company, okay? So Delta is a publicly traded company, and see, this is good. I wish I had Jacob Clifford coming in here to talk about stocks. He's the AP macro guy. But as far as that goes, when we're thinking about the stock market, I'm buying a piece of the company. So I own if I bought like 100 shares of Delta stock at $21, then I'm buying it for like $210. I own like a very small piece of a multi-billion-dollar company. And as people's perception of that company's value goes up, then I can sell that stock. Okay, so the thing is, I'm not going to buy it on the margin. I'm not going to now. The thing is, I could think about it. I think that would be irresponsible, but it's what a lot of people were doing, that they were basically, what happens here is when the stock market crash happens, yes, press F to pay respects, all right, that what happened here is that in the 1929 crash, there were a bunch of people who were like, what I'm going to do, see, since the interest rates are low, the speculation is I can borrow money, I can invest it in the stock market. The stock market goes up faster than interest rates. So then I'll sell the stock in 6 months and then I'll pay back the loan. Now that works really great until it doesn't. Okay, so what happens in the stock market crash is people didn't only lose the money that they had put in, but they also lose the money that they had borrowed to buy stocks. Okay, so what you're seeing here is the stock market speculation. So when the stock market crashed, okay, investors who had bought on the margin, let me share again, right? Anytime I'm in this screen, I need to remember to share. Also, are there any of you who have interest in coming on here like on a video camera and talking to me? Okay, now as far as that, okay, the president is here. All right, we'll allow a once in a while little thing from the president, but let's not get out of hand with that. Okay, all right, so as far as that goes, what does that mean, clipping everything? All right, so with that, we go into this, and we're thinking about when the stock market crashed in 1929. Okay, so investors who had bought on margin, okay, so who had bought stocks on the margin, those people lost not only lost their own money, okay, but also owed money to lender, to whoever, to those who had lent. Okay, so to bank brokers and banks, brokerage houses that had lent them the money. Okay, so it lent them the money, and then the brokerage house has toxic debt. So we think about, to continue this, then the brokerage houses had toxic debt that they had no way to collect, okay, from ruined investors. So this is definitely something with dominoes falling here, okay? So when you look at this, when the stock market finally crashed, it was a big mess. Okay, so that's part of what we could see there. So there was excessive borrowing due to cheap credit policies. We had, basically the 1920s were a period of transition. You can go into that. Then we can see here the overproduction. Okay, that basically what's happening, because of rampant consumerism in the early 1920s. Basically factories continued to produce. Okay, so to produce at the rates they had been producing. Okay, so when we think about this, they had been producing at those rates. And so they continue to produce at the rates that they had been producing. So they're producing products, okay, new products, okay, at the rate they had been producing. So as consumerism slowed down, okay, in the late 1920s, 1920s, a lot of stuff was sitting on the shelves. Okay, so a lot of goods were left on the shelves. Okay, now when we think about this, that impacts profits, right? Okay, so that impacts profits, which in turn impacts stock prices, because when you get, like, when the company reports on its profits and they say, oh, we didn't have a very good quarter, the stock price goes down. So when you think about, for example, like Delta Airlines, we're thinking in terms of Delta's having a very big problem, and not just Delta, but any of these airlines in the short term. Okay, so their short-term profit margin is going down, which is causing some very serious problems. Okay, so as far as that, I'm trying to get this thing I'm trying to get all of this on one page, because I don't like how it's set up there. Stop it. Okay, but anyway, let's see. We'll okay, there we go. All right, so with that, I can get a little bit funny about my stuff. All right, so with that, now we're going to think about, so we've got several factors here, and then here's another thing. When we're talking about the Great Depression, the next thing that we get into here is Herbert Hoover's policies. Okay, so when we think about this, that they are, when we look into this, I'm going to put option, part 5 here, is that Herbert Hoover's policies. Okay, so this is the thing. President Herbert Hoover, here's the issue, that Herbert Hoover was an engineer, and engineers like to tinker with things. Okay, Herbert Hoover was also the first president that was born west of the Mississippi River, which kind of says something about, what's happening to the country, right? So Herbert Hoover's policies. Now, there are some historiographical schools that will argue that Herbert Hoover, in his response, turned something that could have been just a panic into a full-blown depression. Okay, so when we look at this, Hoover responded to the Great Depression. Okay, so to the the stock market crash, with a number of flawed policies. Okay, so with a number of flawed policies. And so what I'm going to say here is we're going to make this. So first of all, a tax increase. Okay, so he increased taxes, which, when we think about this, when the economy is not going so well, that is not something that, you don't want to increase taxes. That's the last thing you want to do. Okay, so believing, which this is going to make some of y'all laugh, that believing that the budget, that the federal budget should be balanced. Okay, who believes that nowadays, right? So believing that the federal budget should be balanced, what we're going to see here. Okay, so Hoover signed a tax increase into law with the goal of collecting more federal revenue. Okay. So, the 20s were largely a period of low regulation and low taxes. Now, when it comes down to it, that this had, had the unintended, basically had, came with the consequence of slowing down an already faltering economy. Okay. Because when it comes down to it, tax cuts, they help the economy. Tax increases aren't good for the economy because when there's a tax increase, people are paying more. They have less disposable income. Okay. So basically slowing down of an already faltering economy because people don't have as much control over their own money. And then the next thing he does is a wage freeze. Okay. So basically he wanted a voluntary, and actually, you know what? Let me not focus so much on the voluntary wage freeze as much as let me note here that a tariff increase. Okay, so not only an increase in taxes, but a tariff increase. That the Hawley-Smoot tariff or the Smoot-Hawley tariff. So that's something that I see it both ways here. So the Hawley-Smoot tariff, okay, this is something that Hoover signed into law. So the Hawley-Smoot tariff intended to protect American jobs. Okay, ended up having a devastating effect on trade. Okay, so a devastating effect on global trade. And when we think about it, economics is the production, distribution, and consumption. Now, what we're going to note here, we need to, the Hawley-Smoot tariff, the second highest, okay, the second highest tariff in U.S. history, in the history of the United States. Okay. What would y'all say here? What would you say? What was the highest tariff in the history of the United States? The Hawley-Smoot tariff was the second highest. What was the highest tariff in the in the U.S. history? Y'all let me know. Guess. No, it's actually it's a tariff that y'all it's not a surprise. Okay, it's not a surprise. It's something that okay, you have been over. Okay, we have a winner, James. Yes, the tariff of abomination, tariff of 1828. Okay, so okay, so with that, 1928, yeah, so the tariff of, and not 1920, 1828, the tariff of abominations was the highest tariff ever passed in U.S. history. Okay, so the Hawley-Smoot tariff was second, okay, having a devastating effect on global trade. And so this is something that when we look at this, that Hoover is trying to tinker with things, okay? So he's trying to tinker with things and try to improve things, but he's making all of the wrong decisions, okay? He's making all of the wrong decisions. Then we see that, I'll go ahead and put that on there because we like to know things in threes. But the last thing, one of the things that he did was he got business leaders together to go over, to endorse a voluntary wage freeze. Okay, so that's the other thing that Hoover got. And while we're doing this, I haven't done any Instagram shout outs yet. If anybody's following me on Instagram at Tom Richey, also follow my friends at Marco Learning. We've got Ladybug 04002, Scammy Boy. We've got Johnny Polygon has followed me. Thank y'all very much for the Instagram follows, and I'll do some more of those throughout the broadcast. Okay, very, very glad to see y'all. Y'all doing that. All right, so going from there, ladies and gentlemen. Let's see. So a voluntary wage freeze. Basically, Hoover got business leaders together. Okay, so business leaders together, to agree to freeze wages. Okay, now basically, so that people's incomes won't go down. Okay. And so the thing is, though, that what can happen here, so got business leaders together to agree to freeze wages. This had the unintended consequences. Okay. The unintended consequence of of increasing unemployment. Okay. So here's the thing, like, think about it this way, that wages want to go down when the economy's going down. Okay. So, for example, like, I mean, I'm thankful that as a teacher, I'm getting paid like the same as I've always been paid. But at the same time, this is one of those things that, strictly speaking, it's from a purely economic perspective. It is, yes, I have a TikTok. I haven't used it a lot, but yeah. So Seth, yeah, I follow you on TikTok. All right. So as far as that goes, it doesn't make a lot of economic sense. Now, it makes political sense to pay me as a teacher when I'm working from home, but it doesn't make a lot of economic sense right now. Let's say that we've got 100 employees, okay? So if we've got 100 employees in a firm, then what I could do, let's say the economy contracts 20%. Now, what I could do is I could lower wages by 20% for everybody and keep everyone employed. Or I can say, you know what, I'm freezing wages. And as people quit, get fired, retire, I don't replace those employees. And so what happens here is that the wage freeze ends up discouraging companies from hiring. Okay. So as far as that goes, yes, the negatives outweighs the positive in this one, boys. Okay, great. All right. So as far as that goes, those are several things here. So understand that when we look at this, maybe the depression was natural because it was a period of transition. There was excessive borrowing due to cheap credit policies, excessive stock market speculation, overproduction in the late 1920s, and then Herbert Hoover's policies, which turned a depression. I mean, which turned, basically, did they, so the question is, did they turn a recession into the Great Depression? Okay. Or what we might think about, did they turn a panic? Okay. Because what we're looking at right now, like with the coronavirus, we're looking at something that you would call an economic panic. Like, we're not necessarily experiencing a depression, but could the government take actions that could end up having an undesirable consequence? Okay. That's something to think about. Now, here's the thing as well. We want to note that Hoover did take measures. Okay. So while not as ambitious as FDR, Hoover did take measures, okay, to use the government, to try to remedy, so to use government power, so to use the, the power of government to remedy the depression. Okay. He failed, so basically several failed measures. Now, one of the things that we'll note here is that he created the Farm Board. Okay. So he created the Farm Board. If we look here. Okay. So the Federal Farm Board, okay, that was established in 1929. Okay. So we see here the Farm Credit Administration. Let's see if that's actually, okay, that's actually still a thing, is to regulate financial institutions that provide credit to farmers. Okay. So what was going on here is that this was, this was trying to help stabilize prices. Okay. So as far as that goes, this is trying to stabilize prices and, buying surplus crops from farmers. Okay. So, Hoover signed, or Hoover, the Farm Board, into law, which provided, attempted to stabilize crop prices by buying, buying surplus crops from farmers. Okay. So then, so you've got the Farm Board was one thing. Now we're getting kind of deep into stuff. I mean, you're here because you want to have like a deep understanding of what's going on in the Great Depression. Now, another thing that Hoover did was the Reconstruction Finance Corporation. Okay, that's another thing that you could get into as well, as far as something that Hoover tried to do in order to help, make loans. Okay, so make loans to businesses. All right, this is something that, to boost the country's confidence in banks. Okay, so this was to provide loans. Okay, so the Reconstruction Finance Corporation. Was created in order to make loans to banks and, heavy industry. Okay, so basically those are things that he did. But what we want to note is that, Hoover definitely was not seen as successful. Now, here's the thing. What did Hoover not do? Okay, so when it comes down to it, Hoover drew the line at direct relief. Okay, that basically he saw direct relief for people suffering from the, during the Depression, as outside of the scope of government. Okay, so when we think about basically like Hoover versus FDR, okay, so when we think about Hoover versus FDR, that basically, that when we're looking at Hoover and FDR, what we want to note here is what they have in common. Okay, so they both, both created new federal agencies. Okay, agencies designed to deal with the problems of the Great Depression. Okay. Now, one thing we could note here is both, in both cases, these federal agencies did not end up being, helpful in terms of the, need. So, both these federal agencies, in both cases, none of these federal agencies, were particularly helpful in bringing about immediate economic recovery. Okay, so that's what we want to note here, that they were both ineffective. Okay, so when we look at that, now here's the thing though, that FDR put into effect, believed that government should be responsible for direct relief. Okay, so you want to note that direct relief for people who were suffering. Okay, and then meanwhile, Herbert Hoover did not. Okay, so so basically the federal government. Okay, and so Hoover saw direct relief as outside. Direct relief as outside of the legitimate scope of government. Okay, now here's the thing, like this is what this difference has given many people, this has given some people the false so the false impression, it gave people, I mean, this contributed to the, basically a mistaken belief, and the erroneous belief of people both then and now, that Hoover did nothing, to try to remedy the Depression. Okay, so that's what's important to note here is that, yeah, things, he just did the wrong things. Okay, and FDR did things, and none of them really were particularly helpful in bringing the economy back. Okay, and also we would note here that FDR's reforms were much more ambitious, ambitious than Hoover's. Okay, so Hoover's prompting criticism. Okay, so prompting direct criticism from Hoover and other conservatives who believed that the New Deal had gone too far in redefining, redefining the American economy. Okay, so in redefining the American economy. So that's something that we want to note there, that a lot of people said, FDR, you're going too far, but we do want to note that yes, Hoover did things, just did the wrong things. Now, what we want to note here is like the nail in the coffin. Okay, so so we think about, Hoover bills. Okay, we want to note that Hoover bills. Okay, now Hoovervilles, these were shanty towns. Okay, so unemployed people, constructed shanty towns that they called Hoovervilles, blaming the president for their economic woes. Okay, so blaming the president, because when it comes to the economy, it's always so it's always the president's fault. Okay, so shanty towns, like they call them, Hoovervilles. Now we want to note here the bonus army. Okay, so the bonus army debacle was really, was a nail in Hoover's political coffin. Okay, so coffin, which popularizing the idea that Hoover lacked compassion. Okay, compassion for people who were suffering. Okay, so the thing is, it didn't matter that Hoover was actually, like FDR, he was doing things, but he was perceived as doing nothing, and perception is reality in a lot of these cases, right? So when we think about this, we want to think about now the bonus army. I'm just going to tell the story of the bonus army. Some of y'all may be familiar with it. Now, let me note here, from the people here, let's see, did you go over, let me see, did you go over the Great Depression in class before you, your school closed? Okay, so I just want to see like how many of y'all even got this far. Okay, so I'm going to go here, and oh, excellent, Raul, it will appear online. I think that's great. Let me do this poll, and I would be glad, yeah, especially if we've got some teachers that want to join us, that would be awesome. Okay, so as far as that goes, yeah, let me get Raul in here, and let me send him an invitation. We're going to invite him on screen. All right. So, yeah. So the thing is, looks like about 2/3 of you did go over the Great Depression. Hopefully, some of you who went over it, we probably went a little bit deeper into it than you might have gone in class. So I think one of the nice things about this is, as teachers, we always complain we don't have enough time to go into enough depth. And I'm thinking now we've got time, like there's no bell, right? So let's see. So we have. Oh, okay. Looks like he's coming on screen. All right.
Hey, Tom.
Hey, you want to introduce yourself to the audience here? Give a shout out to your students in your school.
Yes, my name is Raul Uranaga. I'm a teacher at West York Area High School here in Pennsylvania, and my son is actually taking the AP U.S. History class, and he's probably watching this right now and giggling and things like that. So, on behalf of all the other,
are you his APUSH teacher?
Yes, I am.
Oh, excellent! Wow, that's got to be interesting. Okay, I wonder that about my daughter, even though I teach in another district. Some people ask, like, your daughter gets in high school, is she going to take your class? So yeah, what do you have to add to what we've been going over already?
Well, I mean, you're spot on with what it's the reasons for the Great Depression. Stock market was a factor, not the factor, which a lot of people definitely mistake. Hoover did a lot more than we all give him credit for. So that's a big thing when it comes to, why did the Great Depression happen? It wasn't a one-time event, a one-time sort of thing. This was like a slow series of events that led into the Great Depression. Eventually went into what we know it as, is with high unemployment and government seemingly, help us to do things under a Republican president. And that's just because of political ideology more so than government needs to do these things. I guess I don't know if this is part of the presentation, is that much of what
really we're pretty flexible here at this point. I mean, anything
okay.
is going to be helpful. Yeah. And also we've got to remember we haven't told the story of the bonus army. If you would like to do the honors there, then that would be certainly welcome. But yeah, go ahead and continue on what you're saying here.
Okay. That's Champ back. That's my dog Champ back there on the couch there. He's wants to hear about it. I guess not. We put him to sleep now. But anyway, the bonus army was a group of World War I veterans who they were expecting, or basically part of government relief. They weren't due to get their like paychecks or their payments from the federal government. I'm not sure. Was it 1945 or?
Yeah, it's like basically, they were slated to get paid. In 1945, and they're thinking like, hey, why don't we just get paid now since we need the money, right?
Exactly. So they went to Washington to ask Congress to, advocate for legislation that will pay them early, and they camped out in Washington, and they were pretty much turned away by a World War I veteran himself, Douglas MacArthur.
Oh gosh, MacArthur. Yeah, they may or may not know MacArthur yet. Yeah, feel free to tell them a little bit about this guy.
He will. Like I say, I'll leave that for your discussion on World War II later on. But he'll become very famous very soon in the scope of American history when it comes to the late 1930s and into 1945. But he was definitely an interesting character when it came to the U.S. military and leadership of the times. But he ordered troops to go in with bayonets into the bonus army's camp, and using tear gas and setting fire to the bonus army camp. He drove them out, and it was just terrible press when it came to the bonus army. So, or the bonus army situation. And FDR, watching this in the middle of the 1932 presidential election, pretty much said, "This is going to wind up electing me." When they see pictures of Hoovervilles and bonus armies, and I believe, don't get me wrong, but I think a child died in the panic that happened to get people out of the Hoovervilles in Washington, D.C. And that was just one single incident that was remembered throughout the fall. So I guess economic statistics bear out that 1932 was the worst year of the Great Depression, plus the bonus army, plus very limited response by the federal government to provide relief, gives Franklin Roosevelt his platform to win the election of 1932. And I know in another class, we take a look at 1932 as a realigning election.
Do you teach government as well?
Yes, I do.
Oh, excellent. Okay, so that's a great one to kind of bring in. And especially those of you students who are going to take AP government next year, remember this election. Like, it's very important in terms of that you'll be able to use that on a government exam for realignment.
Mm-hmm. And it's also kind of like a turning point what the federal government does. And, a lot of the stuff that the federal government is doing now to combat the coronavirus, imagine that not existing prior to, well, none of what the federal government does today, what we take for granted, did not exist before 1932. So you look at 1932 as a change in U.S. history, historical events, while also in politics. It shows a more active, more um, uh, heavy influx of the executive power of the president, as well as creating the federal bureaucracy that we know of today.
Yeah, and
So
that's something that I think is interesting when you think about. I mean, although Donald Trump's a Republican president who campaigned on low taxes, low regulation, we see now, like last night, there were some teachers that took issue with something I tweeted earlier today. A few people, because I was just like, hey, teachers were like, we're getting to stay home and we're still getting our full pay, and they were like, well, we're working, and it's like, what, that's great, but I guess what I'm thinking about is the governor of South Carolina ordered that starting today, like, I can't go eat in a restaurant today in South Carolina. I can get takeout. So it's like they're to go only. And so my daughter and I went and ate at the Mexican restaurant where we like to eat. And I mean, there's this guy that waits on me just about every time. He's got our order memorized. He's like, walks up to us, brings us, what we want to drink, and asks, do you want this again? Or sometimes he knows I order something else. Well, or do you want this? And he told me goodbye as he walked out last night. He's like, I guess I'd go on a vacation, but I don't really have any money, so I'll stay at home. And so the thing is, it's like watching this guy walk out the door who's always so good to me, and knowing that he's walking out that door into a period of economic uncertainty. And so now President Trump is talking about now the Yang Gang. We've seen a resurgence of the Yang Gang, and Andrew Yang says that he's actually been asked by White House officials to give some of his, research on the universal basic income, because President Trump is talking about already that we need to send direct relief to people like my friend who's, waiting tables at the restaurant, people in the service industry who don't have their money. So,
a lot of our students do have those part-time jobs as servers or cashiers, and they have seen, obviously, if they're not in school, they could see this as a good way to earn money. Well, they're not earning money now, so that's a good example of how how could this virus cause this great economic catastrophe. This is just like everything is connected in many cases.
Yeah, so that's a great thing. What we've been getting into, just basically about how this affects the way that Americans view government, because nobody is, I mean, maybe very few people are going to have a problem today with the idea of giving direct relief to people who are temporarily unemployed by this. Because for me, it's like, yeah, I understand that teachers are still working. I mean, I'm certainly doing my share of work, but I'm very grateful to be in a situation where I'm not directly affected by this. So when you hear President Trump talk about, like, let's make sure to give them, to get them some money as soon as possible. And I don't think there are going to be probably like, 40 Republicans who will vote against it, but the Democrats will vote for it, and the majority of the Republicans will vote for it as well. And it's not really going to be an issue of heavy debate. All right. Well, Raul, thank you so much for joining us and for encouraging your students to be here. And I guess you and I might see each other just about every day if you're, coming in the government ones as well. So we're doing government Tuesday, Thursday. So yeah, thanks for stopping in. And students, y'all. Oh, and we've got your dog has been popular, Raul, in the chat. So, yeah. So as far as that goes, the dog's been popular, and we'll see you and your students around.
All right, guys, stay well, and I'll talk to you later.
All right. Get a So if there are any of you students that want to come in and ask a question or anything like that, then great. Okay. So POG, I got to find out what a POG is. Now, one thing that I want to do before we wrap up. Okay. So we're going to wrap up at a certain point here. But what I would like to do is to go over what I think could be, and this is what I want to note here. Like when somebody was asking me about what was the most important cause, okay, of the Great Depression, one thing that we could get like 2 years ago, the DBQ topic was evaluate the relative importance for like reasons for U.S. imperialism. And so what you could see in a similar prompt format is the reason that when that question was put to me, I was thinking about, okay, so evaluate the relative importance of the causes for the collapse of the United States economy during the period from 1929 to 1933. Now, if you were writing a DBQ, what you would find here is that you would find like what they would expect you to have is kind of thinking about what's going on here in these terms. So, you would be using this background information that you've got and comparing that to the documentary evidence that you would see in those terms. Okay. Now this, this was the 2018 exam. Now there's also, the 2019 exam could be another, you could find another thing that would be good for that from an LEQ perspective, but I think that you could definitely see a causation LEQ. So, when we're thinking about a causation LEQ, what we could think about is evaluate the extent. Okay, so what we could do here, if we were to use let me just stop sharing so I don't have like College Board stuff showing. Even though this College Board stuff is available online, you can search for it as well. So APUSH free response 2019. Okay, so if I go here, I could see some, like last year on the exam, there were causation prompts. Okay, so what we would do here is, evaluate the extent. Okay, so possible LEQ prompt. Okay, both of these are kind of like a causation angle. Okay, so when we're thinking about like what caused this, a possible LEQ prompt that we could see would be something like, let's see here. So possible LEQ prompt could be something like evaluate and I'll put this up in just a second so y'all can all see it. So the extent to which let's see. So the extent to which 19, let's see. So from 1920, let's see. So yeah. So evaluate the extent to which speculation in the stock market, okay, between 1920 and 1929, let's see, the stock market led the United States. Okay, so led the United States into the Great Depression in the period. Let me make sure I've got that, and then I'll display it as soon as I'm finished here. So in the period, okay, got it. In the period from, okay, so in the period from. And so this is another prompt format. I'm about to put this so I can share it with you. Okay, so what we would see if we were seeing like this, okay, so I'm going to go ahead and share again. Okay, so let me go ahead and share again. And so what we see here is a possible LEQ prompt. Evaluate the extent to which speculation in the stock market in the period from 1920 to 1929 led the United States into the Great Depression. And what you would do here is you would devote at least one body paragraph. Now you would have to note, are you going to say to a great extent or to a small extent? Okay. And so, you would have here the stock market, okay, small or great extent, okay, and then you would have another cause, okay, which could be primary or supplemental. Okay, so here's the thing, that what it's going to what it's going to do here is that you're going to say an additional cause. Okay, so you would basically, if you're trying to write a complex understanding essay, then what you would do here is you would bring in any of these things. Okay, so you could say overproduction. You could go into it being a natural period of transition. You could go into excessive borrowing and consumerism. Okay, so what we see here, excessive borrowing due to consumerism and cheap credit policies. Okay, now remember that going back to the progressive era, the Federal Reserve sets the interest rates. Okay, and so as far as that goes, we saw when we looked at those Federal Reserve numbers that in 1928 we start to see. So that's the thing, like what Raul was saying about the stock market crash. We see a lead up to this. Okay, so we see interest rates in 1928 start to rise. Okay, so we want to note here when the Federal Reserve, okay, so the Federal Reserve raised interest rates in 1928. Okay, so 1928, it began to put a strain on the people, on an economy that was already heavily in debt. Okay, so we think strain on people and on Americans who were already heavily in debt. Okay, so that's what we see there. So we could look at any of these things and present something. So what I could say here for my additional cause, okay, then I could say here that I could say that my other cause is that Hoover. Okay, I would say that Hoover's policies. Okay, so I would say here that Hoover's policies were also responsible. Okay, now what I'm going to say here is the stock market would be a contributing factor, and then I could argue that Hoover's policies were the primary factor. Okay, so this is what I would do here. Is that I would note here that there was speculation. We have buying on the margin. Okay, then we could have the stock market crash. Okay, so the stock, so the 1929 crash. Okay, so we see what's going on there, and I could talk about that as a contributing factor. But then I could also go into Hoover's policies, a tax increase. Okay, voluntary wage freeze. Okay, so freeze, and the Hawley-Smoot tariff. Okay, and so what I could do here is I could say that these resulted in further, like when I think about the effects, that it resulted in further just chaos in the economy, in terms of the economy wasn't able to get back on its feet. It's almost like that the economy is just trying to get up off the ground, and then there's Hoover, like slap, like just here you go, like you're trying to get up and I'm not going to let you. So that's something that could be argued. So we would say here that although stock market speculation contributed to the Great Depression. Okay, so so we see here, and what I would probably say here, that the stock market, okay, to which the stock market in the period from 1920 to 1929. Okay, so let's see. Actually, you know what? I think I like speculation in the stock market. Okay, so although the stock market speculation contributed to the Great Depression because many people were ruined by the stock market crash, Herbert Hoover was primarily responsible. So Herbert Hoover's policies had an even more. Hey, Caroline, you want to say hey?
Hello, peeps.
All right. So Herbert Hoover's policies had an even more disastrous effect because all of his solutions made the economy worse. Okay, so I could make that argument. That would be an example of a, when we think about a complex thesis, okay, because that's bringing in an additional cause. So in the first body paragraph, I talk about the stock market. In the second body paragraph, I talk about Herbert Hoover's policies. Now we could also get into something that is a bit more, focused on the stock market if I'm not going for complex understanding. But I find with causation, it's very easy to pursue the complex understanding because you're in a situation where all you have to do is come up with another explanation, you see? So that's something to keep in mind, that if you were to run into an LEQ. And with that, let me make sure I'm going to reshare this link here and make sure that y'all are able to take that home with you. Okay, so you can have access to this. I'm going to give you this again so that I'm already sharing that. Okay, so you do actually have to, you're going to have to you know what? I'm going to tweet out the link. Okay, so I'm going to tweet out the link to my to the Google Doc. Okay, so here is a link. Here is a link to all right, Nicholas Ferroni doing the teaching from home selfie. Okay, that's a great idea. So here is here is a link. Okay, so to the Google document that I used, Okay, so here's the link to, and I'll answer a couple more questions. And if anybody wants to get on camera, we can do that. I used in today's Corona class. Okay, so I've got in just a second, you're going to see on my Twitter at Tom Richey. Okay, so you're going to see that's going to be live. Okay, so I'm about to click that and we are going to tweet that out. Okay, so I'm going to use for notes. All right. So we've got that. Okay, so the Google document is is there. Okay, so as far as that goes, let's go ahead and okay, and I think that let's see. Raul, I think, okay, yeah, okay, so Raul's actually on there. Okay, so there we go. All right, so as far as that goes, we're there, and let me see if there's anybody who wants to come in. Okay, Seth gets on camera in my Instagram lives. Okay, I'll do an Instagram live later. But Seth, so let's go ahead and let me note here. Thank you, Savannah, for the recent follow. Ariana to the B2004, Goblin. Oh, that's not such a nice thing to say about oneself. Sam Camacho and RT Mui. All right. So thank y'all so much for the recent follows. And hey, Jesse Allen, who also I think gave me some likes. So I appreciate that very much. Okay. So going from there, let me see what we've got. There, a seasonal store. Wow. Okay. So going from there, let's see. All right, let him. Who wants to let's see, answer questions? Okay, shout out to Mr. Glass. Who wants to come on? Thank you, Lauren. Who wants to come on? Let's see. Shout out to Miss Miller from California. All right. Let me go on to explain. Okay. Seth wants to explain what a POG is. Y'all stop for a second because I can't let him on because I can't. The chat's like too lit. I'm trying it's really okay. So now I can okay. So Seth, you can explain to us very quickly what a POG is. All right.
Hey.
Okay, Seth, what is a POG?
Okay, so POG, it's like a video game term. It stems from it originally meant play of the game, but then on Twitch, do you know what Twitch is?
I've heard of Twitch. PewDiePie called someone a name one time, didn't he?
Yeah. So it's like a streaming website that most people just use for streaming video games, but there's other
Okay.
stereotypes surrounding it as well.
Yeah.
But so on Twitch, there's like emotes that people put in like the live chats, and so one of the emotes that they put all the time, it's called like PogChamp, and then there's like different variations of it, and so it basically people like spam it whenever the streamer does something good. So it means that like
So when I see good, it's like play of game champ, right?
yeah, yes.
Okay,
That's
so
correct.
shout out to Mr. Kane. If I call Mr. Kane like a pog, then I'm good.
It's not. It's like he did something.
Oh, he did something. That was pog. Okay.
Yes.
So
Yeah.
okay, so almost like clutch or something like that.
Yeah. Sure.
Okay, similar. Okay. See, this is great. The Corona classes, we're having like a real classroom vibe, complete with like students explaining stuff to me and
Yeah.
getting on the tangents and all of that kind of stuff. So, play of the game. Okay, so that was
Yeah.
like
Play of the game.
okay. So if I see pog, I know that that's good.
Yes, it's a good thing.
All right. So yeah, hello gamers. All right. Thank you so much, Seth, for giving us
of
that
course.
wisdom. All right. And let's anybody else. Okay, shout out to CMI. This is awesome. Oh, Vanessa's here. Vanessa, do you want to come on live? Say anything? All right, great to see folks coming in here and joining us there. But yeah, so good to see Vanessa and her students over there in Orlando, Florida. All right, so anybody thinking about coming online, because I'm about to end the broadcast, and I will be back at 2 p.m. Okay, so we've got Jess wants to come online, so we'll invite Jess. But I'll be back 2 p.m. on Friday to talk about the new deal. All right. Let's see. Oh, do you want to see like my dog? Let's see. Hey, Bonnie. Bonnie, she's sleeping. I tell you what, she's 13 years old and she's blind. We get a Poggers dab with a side of ooh woo? All right, I can do a dab even though I'm not coughing. Okay, so ladies and gentlemen, also we want to remember that on my Twitter as well, because I think I've already put something about this in the chat. Make sure to go to Marco Learning free events and make sure that you go to this session.
Oh my god! Yeah, I have Wi-Fi. Because my Wi-Fi is on the computer. I couldn't even watch a YouTube video.
Do you have anything to say to us, Jeff?
Anything to say? Jesselyn!
All right. Thank you so much, Tim. Hey, y'all click that link that Tim just shared. Marker.com. That's going to get you into the session this evening. Okay, Jess is all right. So as far as that goes, what Tim just shared here, make sure that we've got that. Okay, so make sure that you click that because that is going to be today, I believe, if I'm not mistaken, at 6 p.m. if I'm not mistaken. So let me see. Yeah, that's going to be that's going to be happening at 6. Okay. And then I'm thinking about at 8, perhaps doing a broadcast on my YouTube channel, but I may not today because I've done a lot of broadcasting. But Mr. Dylan from Yuma, Arizona. Okay. Excellent. Excellent. And so with that, just stay in tune with my channel and all of that kind of stuff. You follow me on Twitter and Snapchat. Snapchat is Tom Richey SC. I don't share stuff on Snapchat much, but every once in a while, if I'm traveling and I'm like, hey, here's something for my Snapchat story that I found kind of funny. All right. So with that, ladies and gentlemen, I will be back at 2 p.m. Eastern on Friday, and make sure that you are on my subscribe to my YouTube channel. If Seth Wisdom is on the Discord, he can kind of give me some instructions on there. So I'll definitely consider it. Okay. Ooh. All right. So with that, ladies and gentlemen, thank y'all for joining me today. And I'll be back on Friday for the 3rd session of our APUSH Corona Cast. Make sure that y'all stay healthy and wash your hands. It's always a pleasure.